So you've done all your research and you've found the perfect stock you are ready to buy. You log into your trading app and then you're hit with a choice that makes you freeze. Do you enter a market order or a limit order? What's the difference? Should you choose one or the other? Does it matter? I'll explain what each one is, what the differences are, and why you should choose one or the other. I'll be using the WeBull app to help me demonstrate, and I'll do it all in 5 minutes or less because today is another 5-Minute Friday. How's it going, everybody? Welcome back to the channel. If it's your first time here, my name is Jay, and on this channel, I put my over 20 years of investing and finance experience to use to give you all the tools, tips, and tricks that you need to get the most out of your money. Today, we're talking about stock market order types. We have market orders and limit orders. They're the two most common you'll come across. I'll be using the WeBull app to help me demonstrate what they are and the differences between them. So now seems like a good time to mention that if you sign up for WeBull using the link down below, they will give you 2 free stocks valued at a minimum of $8, but one of them could be worth up to $1,600. So get started investing, use the link below. You get 2 free stocks to set you on your way. So without further ado, let's put 5 minutes on the clock and let's get going. Okay, so I'm here within the WeBull app. I'm using their paper trading feature, which is a great feature. Lets you practice using the app, practice buying and selling stocks with play money so you don't make any mistakes and lose real money. So obviously, I want it to be as realistic as possible to my normal portfolio. That's why I have $1 million here in my paper trading portfolio. So we're ready to buy a stock. Let's go quick trade. We want to buy some Apple. We're ready to buy Apple stock. So we pull up the Apple page here. We can see what's going on. I'm going to click paper trading to get us ready to enter our order. So let's say we're going to buy 100 shares of Apple because why not? Now you can see down here it says order type, limit, and if I expand it, I can do limit or market. A market order will simply be whenever I press that confirm button to buy the stock, I'm buying the stock at whatever the going price on the market is at that second. So you can see up here on the top, it's changing 115.89, 115.90, 91, 115.92. So as soon as I hit confirm with our market order, boom, we just bought Apple at 115.93 is the price we got for those 100 shares of Apple. So let's go back now. Go back to paper trading. We're gonna buy another 100 shares of Apple. This time we're gonna set a limit order. A limit order means I get to specify the exact price that my order will be filled. So right now Apple's trading at 115.92. I think a fair price for Apple will be $115 even, let's say. So I enter my limit price of $115, and when I press confirm, my order will only be filled if Apple hits $115 even. If it stays at 115.90 something, whatever it is currently, my order is just gonna expire and I'll try again tomorrow. Now, this other section down here, time in force, it says day or GTC. Day means this order will be only good for this trading day. Right now it's 1:30 in the afternoon Eastern time. The trading day closes at 4:30. So once 4:30 hits, my order gets canceled. If Apple didn't hit my price, I don't get it. GTC means good till canceled. So if I do a GTC order for $115, 100 shares of Apple, and I hit confirm, my order will stay open until Apple hits $115. But for now, we're gonna order a limit order. So just for today, $115 and hit confirm. So now if Apple hits at $115, that order for 100 shares will be executed. Whereas the market order, I'm buying my shares at whatever the price is. I don't really care the exact price I'm getting my Apple shares. I'm just saying, I want them now. Whereas a limit order, I'm being picky about the price I want. So you can see we go back to my paper trading main screen here in the WeBull app, the WeBull Paper Trading feature. And you can see I have 100 shares of Apple now, and now it's down to $115.85. I've already lost $8 on that order I placed 3 seconds ago. Now you can see because it hasn't hit $115 even, my limit order I placed is here under open orders, and it will just sit there waiting until Apple hits that price or the trading day ends. So now you know the difference between a market order and a limit order. So which one's better? Which one should you choose? To be honest, for myself personally, I'm a long-term investor. Anything I'm gonna buy, I intend to hold for years. So the exact price down to the penny that I pay for it isn't super important to me. Whether I get Apple there at $115.90 or $115 even is not gonna make a big difference to me years down the line. But if I was buying for the more short term and I really knew where I wanted to get in and where I wanted to get out of the stock, then I might set a limit order because those small differences will add up to my profit margins. So I would say, as a general rule of thumb, the longer your time horizon is, the less it matters. Just go with the market order if you know what you want and how much of it you're gonna buy. If you're gonna invest for the shorter term, which I don't do, but some people do, then you might wanna go with the limit order because you'll know exactly the price you wanna get in on the stock and probably the exact price you wanna get out if you're a trader. So let's check on the clock. How'd I do on the 5 minutes?
Look at us. Hey, look at us.
Look at us. Huh? Who would have thought? Not me.
Please gently click on the like button down below on this video. Helps spread it to other people. We don't have to be aggressive and smash it or destroy it. Just give it a little click, make it turn blue. Subscribe to the channel if you haven't already. And most importantly, check out these next 2 videos that are about to pop up. They'll make you better with your money, and I'll see you over there.